Stocks are up across the board, with the exception of one big loser in the market. Heineken is the world's second largest brewer. It has reported an adjusted operating profit that actually beat analyst estimates. So the numbers it put out were better than the street expected. But the Dutch firm forecasts profitability this year will be below its medium-term target as it integrates a Brazilian business it bought from Japanese rival Kirin. Joining us now from Amsterdam is Laurence Debroux, Heineken CFO. Laurence, thanks so much for joining us. Let me first ask you about this battle in Brazil that seems to be mounting here. Is this a case where you're going to invest a lot, you're going to try and expand the business, you're really going to go and try and take market share away from the number one contender in Brazil?
Good morning. The acquisition in Brazil is really putting our strategy into action, winning in the premium segment, which we've been doing in Brazil with the Heineken brand that we built to a 2 million hectoliter brand. And then if we want to play with a full portfolio, having either a number one or a strong number two position in the market. Well, the acquisition of Brazil Kirin, which was about the same size in terms of beer volume as our operation, but has a much more broad-based production capacity with 15 breweries, is really something that 12 breweries, sorry, which is really something that gives us that. So together now we are really covering the full territory and we are in to actually deploy the strategy. So if there is a battle, it's a battle to make sure that this Brazilian market continues to grow in premium and gets back to growth in mainstream and its value and in value. And that is a little bit what we're seeing right now. So I would say rather good news coming from Brazil.
Rather good news. The markets, Laurence, doesn't seem to be taking it quite that way this morning. It's so let me just dig into the weeds a little bit on this. How specifically are you going to kind of push profitability in Brazil? How do you make that happen?
So there are quite a lot of synergies, which we've called upon, and that is about procurement, that is about supply chain, definitely. Brazil is a very large country. You need to be based in the States, in the places where you want to sell your beer, and that's what we're going to be able to do. And that is about this great portfolio, which now is complete, and we're touching all the segments of the portfolio of products. If you look at the time it takes to integrate an acquisition, a company that is that big, we did buy it at the end of first half, and we did say that it would have a dilutive effect in the second half and some residual dilutive effect into 2018. So this is really what we're seeing. If I compare it to our plans, actually the residual dilutive effect is going to fade away pretty nicely. And what I see in the performance of the product of Kirin Brazil at the end of 2017 makes us quite optimistic about this integration and about the share we're taking in that market. So we're very transparent. There is some residual dilutive impact coming into 2018, really on track. We say this acquisition will pay its cost of capital within 5 years, absolutely on track to do that. So this is, I would say, this is a normal track of such a large acquisition in such a large and complex country.
What do you think about M&A beyond the Brazil story, Laurence? I mean, especially considering the market slump, we've seen prices fall 10%. If they fall further, will Heineken, do you have enough dry powder to go in and take action if you see assets that are valued cheaply?
So we end the year with a ratio of net debt to EBITDA, which is slightly below 2.5, which is our long-term ambition. It's quite a conservative ambition. We have quite a conservative financial policy. So I would say, yes, we have room to maneuver. And also, yes, we also have interest costs, financial costs, which are under control thanks to this very reasonable level of debt. Now, when we look at an acquisition, it's really for its own merits. Interest rate being low or high, share prices between low and or being low or high, we really look at the long-term benefit of having these brands, this company into our portfolio, and what can we do better than the previous owner was doing. So Brazil is a pretty significant one. You've seen this year we've added almost 2,000 pubs to our estate in the UK. We believe very much in the pub culture in the UK. We also bought the other half of Lagunitas, and we grow through targeted acquisitions in countries where we're not or where we think we will add some power, and we also grow through greenfields like we've done in Côte d'Ivoire last year, and we're going to do in Mozambique next year.
Laurence, many of the executives that we talk to from liquor companies, from brewing companies, from tobacco companies are examining the issue of whether or not they should be investing into the marijuana business. Is Heineken thinking about investing in the marijuana business?
I'm going to be clear, no. It's a situation that, of course, we're looking at, and then we've had a number of questions with marijuana becoming legalized in a number of states in the U.S. I would say it's too early. We don't see any impact, any significant or even any impact right now. So we are aware of, I would say, what the discussions that are taking place. No, definitely not.
You smile, though, a little bit, Laurence, as pretty much everybody does when you mention weed. I don't know if that means something about how you feel on the subject, but definitely the recreational use of marijuana in the U.S. is taking a little bit of the steam out of at least the craft beer craze. Is that spreading to Europe, or do you still see Europeans drinking IPAs since they can't quite yet go out and legally buy a joint?
If you look at the craft beer evolution, it's been slowing down, definitely, in the past 2 years, which is, when I listen to our friends and partners in craft, is also something that's been happening in the U.S. regularly. With a lot of craft brewery opening, you've seen really an enormous amount, more than one a day, and then a little bit of like coming down to a more reasonable space. In that context, looking at the performance of Lagunitas, we really feel that we actually use the right criteria to go and partner and now fully acquire a craft brewer that is about building brands and building the tribe and having repeat consumer. And this is really what Lagunitas is doing. So really, we're still happy, and the growth of Lagunitas is by far outperforming the craft space. And we also think that Lagunitas has potential as an IP of reference, a U.S. IP of reference outside of the United States. Now, the craft phenomenon has taken proportion in the U.S. that are different than in other countries because of the distribution system. It is still growing. Consumers want choice. They want to drink a repertoire. They want beers that are close to their communities, that they understand, that have a history, and that are of quality, and they know what comes in the beer. And that's what we're providing. Yep. So I'm not worried about this.